Hey, what's up guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell for me so that you're notified every time I upload a new video. Be careful down in the comment section, guys. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp, and I do not invest money from my subscribers. So please be careful. Don't get yourself scammed. If you want 6 free stocks, Webull is going to give you 6 free stocks when you open up a new Webull brokerage account. Put at least 1 penny in that account. They're going to give you 6 free stocks valued all the way up to $12,600. So after the video, I want you guys to go down to the description box of the video. Click on that Webull link, open up your new account today, go get that free stock, go get that free money. On Friday, guys, the stock market continued to rebound. The Dow was up more than 2.7% on Friday. The S&P 500, it was up about 3.1% on Friday. And the NASDAQ had the best Friday. It was up 3.3%. Now the S&P 500 for the week ended up at 6.5% higher than it started the week at, which was the best week for the S&P in about 3 weeks. Some of you may be asking, what happened? Why did stocks rebound the way they did on Wednesday, Thursday, and Friday? Well, the Federal Reserve Chair, Jerome Powell, met with the Senate Banking Committee on Wednesday and Thursday of last week. And what he talked about in that meeting was monetary policy. Talked a lot about inflation and what the Federal Reserve would do in order to bring inflation down. But what he also said was, we're going to be mindful of a recession. Our goal is to bring down inflation, but not necessarily throw our economy into a recession. And that was good news for the market, because that meant, although the Federal Reserve would raise interest rates or short-term interest rates when necessary to combat high inflation, they're going to be mindful of not raising short-term interest rates too fast and too high, which would ultimately throw our economy into a recession. So that was good news for the market. That was a good news for investors. So that really, in my opinion, is what rebounded the stock market on Thursday and Friday. Really, those were your 2 big days. So what do I think is going to be happening for next week in the stock market? I think we will continue to see a slight rebound. We're not out of the woods, guys. We're going to still have a lot of more red days, because whether we like it or not, inflation is still pretty high. Although Fed Chair also mentioned they feel like inflation has peaked. There's some signs out there in the market that it has. There's still more inflationary measures that need to be taken in order to bring inflation down, like increasing short-term interest rates. So I think we'll still see that long term, but next week, I think we'll see a little bit more bounce in the market. And I just don't want us to be thinking, oh, shoot, we're out of the woods. Things are getting ready to start going back up. Pump the brakes. They're not going back up just yet. Again, we're still in a bear market. We're going to still be in this bear market for the next couple of years, in my opinion. Again, guys, just one opinion. But I think we're going to be in this bear market for a couple of years, because when inflation is at 8.5%, we need to get it down to like 2 to 2.5%. So that's a big step down for inflation. Not that we won't do it. I believe we will, but it's going to take some time, right? and the market is going to react differently on different pieces of financial news that come out into the market will act differently. So let's just be aware of that. The goal still should be for us is we should be dollar cost averaging in every single day, every single week, every single month, however you want to dollar cost average in, buying your favorite companies, buying your favorite ETFs, buying your favorite cryptos, because they're going to be on sale, right? I want you guys to drop down in the comment box, what did you buy on Friday? How did you increase your position, and how did you increase your opportunity to gain yourself some net worth, put some net worth in your pocket? Again, guys, we got to consistently be doing this. I'm not saying you got to do it every week. Certainly you got to do it when you can afford to do it. But when you can't afford to do it, you should be buying, because everything is still on sale. Even though we had this little bounce, the Dow, the NASDAQ, and the S&P 500, next week it could all come tumbling down with any financial news that comes out that has anything to do with, a recession, increasing the chances of a recession, any chance of inflation continuing to rise, any bad financial news that comes out, it could wipe out all the gains from all three major indexes that we enjoyed this week. So just be careful with what's going on, what you listen to. Really, you should have a long-term goal of building wealth through the stock market by buying, like I said, blue chip companies, blue chip ETFs, and blue chip cryptos. Again, only what you can afford though. So keep that in mind. Only what you can afford. I also want to touch on a little bit, if you guys got consumer debt out there, this is the time right now to be, paying off that consumer debt. You do not want variable rate consumer debt, hanging out there. You want to get that taken care of, because again, as the Federal Reserve increases short-term interest rates, and we're probably going to see another increase in July, right? So my recommendation is stack rank that consumer debt, highest interest rate to lowest interest rate, and then you take your money, your extra money, and you start paying off the highest interest rate debt first. Get rid of that, and then you move down to the second highest interest rate consumer debt, and then systematically pay that debt off over the next year or earlier if you can. Because what will happen is, if you don't and you leave it hanging out there, and the Fed continues to raise short-term interest rates, and you got credit card debt, or you got a line of credit on your house and it's variable, you got a personal loan out there that's variable, listen, man, you don't want to be in that situation, because what's going to happen is your interest payments are going to go up, and whatever little bit you were paying towards the principal, those increasing interest payments is going to eat away at whatever you were paying at the principal. So concentrate on that as long as you can afford to. I would say concentrate on that before you even invest in the stock market, honestly, because short term, that's where your money should really be going, to wipe out any high interest rate consumer debt. Once you do that, then refocus back on the stock market and buying your favorite companies, your favorite ETFs, and your favorite cryptos. So please do yourself that favor, guys. Don't let that one slip through the cracks, because you'll pay for it later. If you want those 6 free stocks from Webull, click on that link down in the description box. Open up your new account today. Go get that free stock. Go get that free money. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace.
Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.